Welcome to this morning's edition of 3 Minutes on Markets and Money. I'm your host, Lance Roberts. Just want to give you a little bit of an update as we get ready to head into the month of August. Now, the month of August and September historically are fairly weak months performance-wise. Now, what does that mean? Normally, after a big advance in July, like we had, it's not surprising to see the markets give up some of those gains or at least consolidate here for the next month or two as we get ready to head into the end of the year. But also, we've got the weight of the election coming up, and of course, questions over whether or not we're going to get another stimulus relief bill. All those things potentially could weigh on the market short term. So at least it's worth paying attention to what the risks are currently. But let's talk a little bit about where the markets are right now, because Friday the markets did rally as we had really good earnings coming out from Apple, Amazon, and others. And of course, that pushed the markets back up to the top of this consolidation range that we've been talking about now for the last month or so. The problem here is, of course, is that we are very extended on the markets currently. It's been a nice rally from the lows that we retested the 200-day moving average on back earlier in June. And so we've had an advance here that's burned up a lot of that oversold condition that existed then. Now we're moving into 2 weak months of the year. So if we take a look at the markets here, what we see are two things. One, we've got a very strong rising bullish trend line that not only connects these bottoms on a rising bullish trend basis, but also intersects with the 50-day moving average. And there's a good support here with the 200-day moving average just below this bullish trend line. So a lot of support to the downside here for the markets currently would suggest there's fairly limited downside, at least for the next month or so. The upside is that if we can break above the top of this consolidation range that's really kind of been running here, that could put the markets on target for testing all-time highs. Now, above that, there's certainly a possibility, but the initial resistance on a breakout is going to be all-time highs for the markets. We'll see how that occurs. Currently, we're still on a money flow sell signal here, which suggests there's still some pressure in the markets. We'll see what happens here, but this is getting fairly oversold. And so if we do get this to turn up here, give us back into a money flow buy signal, as well as converting the MACD back into a buy signal as well, then that would suggest that the markets are going to make a move higher here over the course of the next few weeks. So the point here is this: we're still maintaining our hedges in our portfolios. We've been building a little bit of a position in the dollar to potentially hedge against a rally in the dollar, which would impact emerging markets, commodities, gold, oil, those type of things. But we're maintaining our long exposure here because of the underlying bullish trend to the markets. There's not a lot of reason right now to become overly negative because the markets are still confined within a bullish trend. So we've been doing some rebalancing in portfolios, just really mitigating risk by changing positions that are lagging into leading positions, really understanding kind of where markets are, but also continuing to maintain hedges, having a little bit of extra cash here, and of course also maintaining our bond exposure. And this is part of the article that's on the website today called Reasons to Hold Cash, because their cash is a good hedge to have in markets where there is some uncertainty to the downside. And again, lots of things over the next month or two that could upset the market. So again, downside risk is not completely alleviated. That's 3 Minutes on Markets and Money. I'm your host, Lance Roberts. We'll see you next time.